Welcome back. Well, we take a closer look at the day's market action now with Andrew Padoa from Sasfin Wealth. Thank you so much for your time, Andrew. I guess before we get into the meat and potatoes of today's trading session, the JSE, of course, yesterday having a historic moment, but we do see a slight pull back today. What are you making of it? Is it anything significant, or are we still good?
Zanati, thank you for having me. I think the answer is we're still good. The rally that we've seen from the JSE, it's been amazing, but it's been driven by a handful of stocks. You know, we've seen great runs from Naspers, Prosus, British American Tobacco, and of course the resources stocks that you mentioned earlier. The resources stocks kind of had a bit of a pullback today, but I don't think there's anything untoward there. It's just part of investing on the JSE, I suppose.
All right. Well, as we're talking about resource stocks, let's take a look at some of the company news that came out on the JSE. The Anglo-American stable, and of course now that being Anglo-American and Kumba Iron Ore, used to be with Anglo-American Platinum, but of course we know that unbundling that happened there, where they are now listed separately. Let's actually start off with the parent company Anglo-American. Of course, that second quarter production report. And actually the story was quite similar to the other diversified miners that have come out with numbers, their performance being driven by copper and iron ore, seeming that there's a little bit of divergence in terms of how you look at it quarter on quarter and year on year. But they did, of course, have increased production quarter on quarter, but a decline year on year. What story are these numbers telling?
I don't read too much into the numbers, Nati. I think, like you said, it's not too unusual from what we've seen from the other diversified miners. I think for me, with Anglos, it's more about, their transition and how that's going, and kind of the execution of this transition, the sale of the De Beers and everything else that's going on, because it's been quite a year for Anglos. So yeah, I think production numbers are kind of in line, nothing unusual, but I'm more keen to see about how they can just get rid of De Beers and kind of move on. They've said that once they've sold the divisions, it's going to be a higher margin business, more cash flows. So I look forward to seeing that in the future.
Okay. No, I hear you. And of course, they also highlighted the fact that it has been a transitionary year for them. Kumba Iron Ore also releasing an interim trading update. They're calling the iron ore market challenging, but still managing to sell the commodity at a higher price. Seems though there's a kind of a weird variation in terms of what they expect for headline earnings. They either expect them to drop or to rise. Just talk to me about what you took out of that update.
So for me, I thought the Kumba results were relatively resilient, which was quite encouraging to see. Even though production was slightly down, sales were slightly up. And as you mentioned, a bit of improved rail performance and logistics coming from Saldanha. So it's nice to hear that Transnet are also, things are improving there on that front. And the fact that Kumba is maintaining guidance, for the rest of the year, which is an encouraging sign. It is a tough environment for these diversified miners, so I think these results are pretty good for Kumba.
Well, an environment that is good for a specific sector, and that is AI and of course tech. We did have Alphabet coming out with its quarter two results, topping market expectations in terms of its earnings, actually from the top to the bottom line. What did you make of those numbers, and also their decision to raise their capital spend by $10 billion?
Yeah, so I thought if we start with the results were really good. Great to see double digits, revenue growth kind of across the board. Google Cloud's been growing at kind of 30% the last couple of quarters, and they kind of still getting those kind of results. For me, and I think for a lot of investors, it's search. How is search doing with ChatGPT here? Is ChatGPT going to destroy Google search? But Google search keeps growing. And we saw double-digit revenue from Google search, which is really encouraging. But like you said, really big capex spend. So I think if it wasn't for that announcement, I think the shares would be a lot higher today.
All right. Well, Tesla, on the other side of the spectrum, disappointing again. Sales plummeting.
Yeah.
Outlook doesn't seem too good either. How rocky is the road for Tesla?
It's a rocky road, Zanati. You know, it's not surprising it's seeing the results from Tesla today, given the rocky road that Elon Musk and the team have been on. Challenging quarter, and I don't think it's going to get any better. I think Elon even flagged in the results that he's warned investors of a couple of rough quarters ahead due to the expiring US EV credits and the rising political and tariff uncertainties. I think the challenge with a company like Tesla, Zanati, and it's something I think a lot about, and it's kind of been drummed into my head and as an investor, but it's the principle of first mover is not a competitive advantage.
Okay.
You'll only know how good you are when the competition comes. And I always think of Tesla and Netflix in that camp. You know, they started new industries. Whereas Netflix has had a lot of competition but has managed to defend their castle. Whereas Tesla, there are a lot of Chinese EV companies and a lot of other guys coming in here, and it's getting very competitive in this space. So I think for investors, you know, if Tesla is a very small position in your portfolio and it's a moonshot play, that's fine. But I wouldn't want it at a 5, 10, 15% position. I wouldn't sleep too well.
That's a very, very interesting point that you make. Well, a stock that you would choose even in your sleep. Your stock pick for today. Quickly, Andrew, 30 seconds.
Sure. So Berkshire Hathaway is my stock pick. It's a steady Eddie for the golfers out there. It's kind of like a 4-iron off the tee box. Won't be amazing, but it won't be a disaster. They've come off a bit the last couple of months with you know, with things improving in the markets. Markets have come up. Berkshire has not. So I think it's a nice defensive play. Given where we are.
Awesome. Thank you so much for your time and for your insights today, Andrew. That was Andrew Padoa from Sasfin Wealth.